The story today is crude oil. Prices of crude oil have surged the most in almost a year. It's happened after that surprise announcement by OPEC Plus, a production cut. It threatens to worsen inflation and push global central banks to tighten monetary policy even further. Treasuries have fallen, the dollar has risen. Brent crude heading for the biggest gain since April 2022. But what's the likely impact on oil explorers and oil marketing companies? Let's put this in context. From our research team, Ashesha is joining us to tell us about the likely impact. Ashesha.
Well, yes, absolutely. Brent crude prices have risen nearly 15% from their March lows. In fact, after falling below that $75 per barrel mark, they've started rising yet again. In fact, they're now at about $83, $85 per barrel mark. Why is that? Saudi Arabia and some other oil-producing OPEC Plus countries have announced output cut, and that is the primary reason oil prices have started rising yet again in the international market. Let's now understand the kind of impact surge in global crude oil prices has on individual sectors and companies back home in India. First up, we will talk about oil explorers, the likes of ONGC, Oil India, Vedanta and HOEC. These companies have positive impact, and that is because higher crude oil prices means higher earnings for these companies. In fact, every $5 per barrel change in crude oil prices increases EPS of ONGC by about 7%, and it increases EPS of Oil India by about 12%. Let's move on to oil marketing companies, the likes of HPCL, BPCL, Reliance Industries, MRPL and Chennai Petroleum. For these kind of companies, the impact is rather mixed, and that is because marketing margins reduce as crude oil prices gain. Meanwhile, inventory gains is what these companies register because of surge in crude oil prices, and hence these companies register mixed moves on account of the change in crude oil prices. In fact, every $1 per barrel change in increase in crude oil prices impacts petrol and diesel margins of these companies by about 40 paise per litre. In fact, there are some other sectors which are negatively impacted. These are the sectors which use crude oil as their major raw material. These includes the likes of paint companies, we have tire companies, aviation or airline companies, cement companies, tire companies and several other lubricant manufacturers as well. Apart from this, on the overall economy as well, increase in crude oil prices has a negative impact, and that is because India imports close to about 85% of its crude oil requirements, and every $10 per barrel increase in average prices of Indian crude oil basket could increase current account deficit by about 14 to 15 billion US dollars, which as a percentage of GDP translates to about 0.4%. So this is the kind of far-fetched impact increase in crude oil prices has on the Indian economy, oil explorers, oil marketing companies and other sectors which use crude oil as their raw material.
All right, Ashesha, that helps us put in context, but to get further perspective on this, let's bring in the experts as well. Kunal Shah is Head of Research at Nirmal Bang Securities, and Bjornar Schildrop is joining us. He's Chief Commodity Analyst at SEB Norway. Great to have you both with us this evening. Gentlemen, Bjornar, coming to you. How surprising was this move by OPEC Plus to you, and how deeply do you think it's going to impact the course of oil prices that were on a downward trajectory in recent times?
Right now, and there were no signals ahead that it was going to happen now. Nonetheless, I mean, we've been saying all the time that we are positive to oil, amongst others, because OPEC has a lot of dry powder to cut. I mean, prior to this cut, and as of today, Saudi Arabia is producing 10.4 million barrels per day, and well above normal production of about 10 million barrels. So after this announced cut of 500,000 barrels for Saudi Arabia and another 500,000 barrels per day for the other non-Russian OPEC Plus members, you know, Saudi Arabia is just down to normal production of about 10 million barrels. So even after this cut, Saudi Arabia and the other OPEC members have a lot of further capacity to cut production if needed. They have full control of the oil price and the oil market, and especially due to the fact that shale oil production growth now is muted and slowing, with US oil rig count falling since early December last year.